Hello, my name is Jason Mercer, the Toronto Real Estate Board's Director of Market Analysis. With September complete, we are now through the third quarter of 2016. So I'd like to take this opportunity to go through the latest TREB MLS commercial statistics, both for the leasing and sale markets, including an overview of underlying indicators. So let's start with the leasing market. TREB Commercial Network members reported a combined 6,592,818 square feet of industrial, commercial retail, and office space leased, and this result was up by 34.8% compared to the third quarter of 2015. Now, it's also important to note that Q3 2015 results did represent a substantial dip compared to the same period in 2014. More than 3/4 of total space leased in Q3 2016 was in the industrial market segment. Now, the average industrial lease rate on a per square foot net basis for transactions with pricing disclosed was up by 8.8% to $5.80 compared to $5.33 in Q3 2015. The average commercial lease rate was down on a year-over-year basis, while the office lease rate was up in comparison to last year. While the Q3 results in the leasing market are certainly positive, they would arguably be viewed with cautious optimism, given that the level of uncertainty that still exists with regard to Canadian economic growth, particularly as it relates to non-consumer sectors of the economy. The Canadian economy over the last year has been marked by regional differences. The Greater Toronto Area has benefited from a diverse economic base, and as a result, the regional economy has been relatively strong, with the unemployment rate generally trending lower. This may at least partly explain why you experienced an uptick in leasing activity in the third quarter compared to 2015. However, there remains some uncertainty in the economic outlook, especially as it relates to exports, and this could impact commercial leasing and sales activity moving forward. Now, the number of combined industrial, commercial retail, and office property sale transactions was down in Q3 2016 compared to a year earlier, with 216 properties changing hands versus 327 properties in Q3 2015. Now, while the number of sales were down year over year, average selling prices on a per square foot basis for transactions where pricing was disclosed proved resilient. Average selling prices were up for all three major market segments. The large increase in office property average price was largely due to a shift in the size and locations of properties sold this year compared to last, with some larger properties changing hands in Toronto's central core. Over the next few months, we will continue to track both the Canadian economy and the regional GTA economy therein. Obviously, the hope is that we will see a sustained uptick in exports and related business investment to service increased demand for products and services produced in Southern Ontario. Thanks very much, and I look forward to speaking with you again following the end of the fourth quarter.
Brought to you by GTA Realtors.